The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to have Stan Harley of the Harley Stock Market Letter today. He's been our guest several times, and he's got some great information for us, as always. On May the 3rd, we're going to have our good friend Norm Winsky from Astro Trend will be our guest because he has some key dates coming up at that time. By the way, the reason why I took off a couple of days is I was making some really serious speaking errors on the show. I kept giving wrong prices with wrong commodities and stocks and everything else. And whenever I do that, I know that I'm just really near making a good trading error, clerical error. I did make one, but I caught it right away, which was good, and so I had to take a couple days off to relax. The problem with this is that I love this stuff so much that it's hard to get away from it, but when I get overtired and I start making errors, there's just no way that I'm going to stay here and do this because it's just a matter of time until I do something really silly. And so I really actually did. I looked at the markets very, very little. Did only one trade. That was the one in the crude oil that we were watching. We put the DAX up, as you can see, that we have a three drive to a there we go again, a three drive to a top pattern here in the DAX that is completed several days ago. We've been in a very, very minor downtrend, since that time. So that's pretty much what we're looking at here as we go through this. Now, one of the things that we were looking at, of course, was the fact that the crude oil was coming down to our level that we were watching to buy, which was at that 48.58 level. That was the 78% level of the last move down from our major resistance that we had at $53. And as you can see from the daily chart, it matched it up perfectly. And I actually sent this out to the people at 24/7, and we'll put this up to let you take a look at it here. You'll notice that we went down to the that level, 48.60. We went about 35 points below it for just a matter of a few minutes and then took right off. And now we've got all the way up to 49.70. And if you happen to have done that trade, the best thing you want to do is put your stop at break even and see what it'll do, because now you have a lead in it. There's no reason to let that turn into a loss. I did have a little bit of sadness here yesterday. Those of you, we had a death of someone that we knew. Those of you that know Mark Douglas and I, that we've had a really long-term relationship over 25 years with some of the hockey players from the 1980 gold medal team. And one of the actors that played Jack O'Callahan, a young man, 35 years old, Mike Manill, he took his own life up in Washington. He was suffering. He was an actor for 3 movies, and then he went into the service, folks, and served our country for 6 years. And he had a couple of tours, and he had PTSD, and I guess it just overwhelmed him like it does many of our wonderful veterans. And he did take his own life yesterday. You can search it online. Just hit the movie Miracle, and you'll see that it's listed there. It's a really nice fellow. I was chatting with Jack O'Callahan this morning, and Jack got to know him really well because he played Jack's part. Jack had to teach him how to play hockey, at least how to get on the ice and stuff. But it was really kind of sad to see something like that happen. Okay, let's move on to some of these other markets because we've only got a little bit of time here before we get Stan Harley on, which is always very, very interesting, and we'll watch it very closely today with some of the things that he's telling us, because it's really some interesting things. I did want to share with you one of the things that's happening here in the stock market on a long-term weekly basis. We'll put this up here so you can see it, because we do have this came from someone on the internet that uses the same types of patterns that and ratios and stuff that we look at. But if you'll notice, you'll see here that this is the spiders, the SPY, which is the ETF for the S&P 500, and we've had a double top up here, possibly at that 1.618 level. But folks, let me tell you what that 1.618 level did to the Nasdaq. It went through it like it didn't even exist on the close. It rallied 30 points in 2 minutes on the close in the Nasdaq, and that was mainly because of the stocks of Google, of course, which is up $40, and Amazon, which is up $35. And that's mainly because these are high cap stocks. I guess Bezos is now, with the market up today, he passes Warren Buffett. And so that's going to be an interesting horse race before it's all over, but we'll keep an eye on it. But anyway, the Nasdaq has been, by strong. It's up about 20-some points, about 22, 23 points already today. But we'll see if it's going. These evidently, they've got a great products. That's amazing, folks. When Google first came out, I don't want to waste any time, but when Google first came out in 2004 in August, it was up about $35. It backed off to a 61% retracement at about $69 or $70. And I bought 100 shares. And I had to go to Vegas for one of the money show conferences. And it was a Friday, and by the time I got to Vegas, the market had closed, and Google had closed at 120. The stock had doubled in just a matter of, that hour-and-a-half flight into Vegas from Tucson. So should have held that stock. Anyway, we'll see how much he's got here. And does anybody know how much Bezos is worth? If they get a chance, we'll post it, but that's not interesting to what's going on here in the market. Let's get to where the real action is, folks, and that is the foreign exchange. Let's just take a look here where we are. This is where we were Sunday. We'll put this up here to take a look at it. This is what I was looking at for potential to get up to this ABCD level here. I didn't know whether this was going to be positive or negative with this French, the Brexit thing, or it's Frexit now. But we'll know on, I believe, May 7th is when they have the vote in France, and that'll be another big thing. But I think they've already discounted the fact that the one dude is going to win and the lady's not going to win. We've heard that before. So we'll see. Anyway, we got a lot of resistance at 110, at least supposedly in the euro. So watch that one, very, very closely. $76 billion. Yes, he passes, he went past Mr. Buffett like he was standing still. Wow. That happens when your stock goes up 30-some points in a day. Boy, you got to give the guy credit, though. It's the easiest company in the world to do business with. Holy cow. It's just really something amazing. Okay, since we're talking about the dollar and the euro and stuff, I want to talk about the dollar index when we get back. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I've posted a chart into the den showing the U.S. dollar index and how it relates to the stock market. The blue line that you see is the S&P 500. As you can see, there's been a big divergence here over the last 10 to 12 days. That's highly unusual, especially the amount of the divergence. In other words, a dollar has been going down rapidly, whereas stocks have been going basically straight up since the 17th of April. And so this is one of the reasons why we've had this explosive move to the upside with this dollar weakening. It makes our dollar cheaper so people can buy more of our products. That's what they say, but you know, those things can change. But the divergence is what's important, is the fact that you're able to see these things in context and how they go together. Usually the correlation between the dollar and the stock market is pretty strong. It's in the neighborhood of about 80%. So we'll see whether this is going to be up. Steve Rhodes just told us that 85% of the NDX 100 stocks are up on the year. That's pretty strong market breadth, that's for sure. And when you stop and think that these are cap weighted with, you know, Amazon and Google in there with their cap weightings when they're $900 a share, that's a foregone conclusion that they're running the market. Folks, the way that it acted yesterday was very reminiscent of what happened in March of 2000 and early 2000 when we were having the dot-com bubble. The Dow had topped in January of 2000. The NASDAQ didn't top until March the 24th of 2000. And we were having these huge gaps. These little companies would come out with their earnings where they had expecting to lose 1 cent, and they made 2 cents, and they would double in price. And it was really an amazing thing to see it happen. But in fact, it was an outlier event, and that's probably not going to happen again. It's my opinion of what I think whether it's going to happen again. Let's switch over here to the bond market. We'll start out by taking a look at the German bond, because that's the one that has had the most beautiful technical picture over the past weeks. And as you can see here, we were watching this last week for a potential of a ABCD pattern happening. We had a beautiful move of 22 days up in both of those cycles. So that tells us that, the rates are starting to go higher again. And if you notice the action today by the German bond, we took out the highs of the last 2 days early in the morning. And then when the news of the UK numbers came out, and then the US GDP, that totally reversed. And there's a possibility that we could start looking at another leg down here in the German bond, i.e. rates going higher. I don't know whether that's going to have any effect on the stock market at all, because the thing is, going up so fast, you just don't know how far it's going to go. We got a caller from California. Brent, are you there?
I am, Larry. How are you?
I'm very good. What can I help you with, my friend?
Welcome back.
Thank you.
Good to have you back.
Yeah.
I was going to ask you about gold.
Sure.
Get your thoughts on it. Just short term, intermediate term, please.
Sure. Well, we hit that big number the other day at 12. I think it was 12.85. We backed off to 12.60. We came down $34, and since that time, we've been in a trading range between 20 or there we go again, between 12.62 and 12.72. It's a $10 rally. I think the bias is to the downside, and my reasoning for that is that it's made lower tops, it's made lower bottoms over the past week. So I still think we've got a chance to get down to that possibly 12.12 area to $1,200 an ounce, where I would certainly be looking to get long the gold. So that's what my longer term view is, and also my shorter term view.
Okay. Yeah, action, the gold stocks, the mining stocks seem to indicate that too. So.
Yes, we've had a really strong divergence in the XAU and then also the HUI, which is the bull-bear index. Both of those were showing divergence. And then we had the really strong divergence in silver, and then the super strong divergence in the platinum, saying it's not quite ready yet. So I'm looking at around somewhere between $1,220 and $1,200 an ounce in gold, preferably around the 15th of May. That would get it down about a month, 4 weeks down. That would be the ideal place. And if we did an ABCD there, that would even be better.
Okay. That sounds good. I got you on my hike again today. So.
Yeah, I hear. I thought you were either climbing a mountain or running the marathon. So just take it easy. Of course, you're young. You can get through with that stuff. But thanks again for calling in. We really appreciate it.
All right. Take care, Larry. Good to talk to you again.
You bet, Brent.
Right,
Thank
bye.
you.
Bye.
Okay, folks. One other question that someone had a question about, and we'll put this up here to take a look about, is the since we looked at crude oil a little earlier, I wanted to show you a really interesting pattern here that is happening in the gasoline contract also. And as you notice here, it's doing the same thing that on a long-term basis that we did in the crude oil. It's making a nice retracement at 78% retracement that we hit spot on yesterday. And so that's telling us that there's a strong probability that we've had some type of a bottom here in the oil complex. However, if we go below that 48.20 level that we made yesterday, in the June crude, that would be extremely bearish, and I don't think it's going to do that. But if we did that, that would be something that would be what I would think would be extremely bearish. Kind of keep an eye on the crude oil today at around that $49 a barrel level, folks. The reason for that is, we had a really strong rally of $1.50 off the bottom. That would be a nice little pullback that you might want to watch, where your risk would not be too much if it's going to be at that level here. The resistance levels in the S&P, of course, are at the 2390 level. The NASDAQ, don't even ask me, because I have no idea what that's going to do with the fact that we've had these moves in Google and also in Amazon, but those are just that's an outlier event. We'll figure that out sometime in the near future, but there's no reason to get like John Logan said, there's no really reason to get involved with it. There's too many other things that look, really, really interesting that have better risk-reward ratios. Crude oil, for one example, that's one thing. We're watching corn very closely for a buying opportunity, and a few of the other grains. Wheat has had a really nice move off of the new moon that we had on the 26th. It rallied more than 15 cents. So those are the ones that you want to keep an eye on. Now, one of the things that I wanted to look at here is to look at this Canadian dollar. We've been looking at this for several weeks, and the main reason is because it has such a high correlation to what crude oil is doing. So it's the reverse of what crude oil is doing. And as you can see here, we're approaching up three major targets here. We are within about 100 pips of some of these targets. So this could be a very, very interesting spot here in the Canadian dollar, because as the Canadian dollar drops, it makes crude oil go lower, and so now this should start to change a little bit. We'll be right back with hopefully Stan Harley of the stock market, Stan Harley Stock Market Letters, 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Stan Harley of the Stan Harley Stock Market Cycles. Stan, are you there?
Good morning, Larry. How are you doing?
Good morning to you, my friend. Listen, I have a couple of quick questions from some of our listeners before we take a look at your cycles that you were going to be talking about. First of all, the first question is, do you use trading days or do you use calendar days, and why?
Well, I use both, but for my detailed analysis, Larry, I use trading days. And why? Big days, we have weekends, holidays, and having looked at both, I find for the pinpoint accuracy that I'm looking for and projecting reversals and so forth, trading days works far better. It's a bit cumbersome. I have to set up multiple spreadsheets to keep track of trading days and make changes along the way of when there's holidays and things like that. So a little bit of work involved, but by far and away, I would use trading days.
Okay, the second question is, being from Southern California, did you have the opportunity to meet Peter Eliades?
Peter Eliades, yes, I know him well.
Yeah, well, we all did. I just didn't know if you did or not because, I knew Peter through, Eddie Horowitz, of course, but he's still going strong like we are, so I guess it's a good thing. Okay, the final question is this. Many people, like myself and Bert Dolman, the Wellington Letter, and also Peter Eliades, were really shocked at the big move that we had, following the Frexit thing from France. And I don't know how you handled that, or what do you do? The question was asked, what do you do when you have something that's an outlier event like this that just reverses everything in a matter of 12 to 15 hours?
Well, that's why you and I, Larry, as technicians, spend so much time poring over charts and and indicators, and then I use cycles. What I strive very, very hard to do is be predictive and not reactive, so that I can see these pivotal turns coming ahead of time and not be surprised by them.
Well, you had that date of April the 5th absolutely spot on, and we were down for 3 weeks, straight down. So those, we know that the dates work pretty well, but when I frankly I don't see outlier events like this very often, and it certainly was that. It was very similar to what happened. The election night was not an outlier event because we pulled down to some really major cycle lows at that time. But when you had something like what happened in Britain, with the Brexit thing, that put the pound from 150 down to 119 in a matter of just a couple weeks. And those are the ones that, really make some people scratch their head, whereas technicians, usually you're seeing something that's going on. So anyway, let's move on to your first page of your letter here, where we're looking at the new All Times coming to a theater near you. So fire away.
Larry, I look at a number of things, but with respect to the stock market in particular, over the intermediate haul, I found that there is a cycle that dominates the market. It averages about 33 weeks. That's roughly 7.6 months, just under 8 months. And looking at a chart going back many, many years, one will see that we tend to get fairly pristine intermediate bottoms about every 159 trading days. That equates to about just under 33 weeks and about 7.6 months. And that cycle's an accordion. It expands and contracts, but that's the average over the long haul. And the last trough in that cycle occurred back on election day, and we've powered up ever since. And if you just did back of the envelope math and you add 7.6 months to November, well, we're getting kind of late in the game here, folks. So we are. Within the context of that primary cycle, we tend to get 4 trading cycles that average about 40 trading days each. And Larry, I found that this intermediate cycle tends to peak out coincident with either the crest in the 3rd trading cycle or the crest in the 4th trading cycle in a bull market environment, going to right translation. And we are right now in the early stage of the 4th trading cycle. from the November bottom. So we're getting kind of late in the game, if you know what I mean.
Oh, yes.
We should be looking for a crest in the fourth trading cycle, and coincident with that, the primary cycle, that 33-week primary cycle. And I think that's coming in a couple of weeks.
Okay, now, Stan, that brings up an interesting point as we come into this seasonal thing that people talk about, sell in May and go away. Do you use any seasonal studies in the stock market work that you do?
Larry, no, I don't.
Okay.
That's a cute jingle, and I know a lot of people follow it. No, for my work, I don't. I mean, it's in the back of my mind, but do I use that? Do I factor it in? No. No. If we get a high here in a couple of weeks, as I'm expecting, and then the market sells off in June, I'm sure you're going to get a lot of people on the airways recalling that jingle and letting folks know how smart they are with the sell and may go away. But I think we'll hit a bottom in June and then power right back to new highs. We're in a bull market here, so I'd be very reticent to get too bearish. We still got. I see this thing generally powering higher and well into next year.
Okay, now I have one other question, but then we'll move on to the next chart, and that is, do you do any cycle work on specific stocks like Apple or Google or, IBM or anything like that, or you just basically do the indices?
Larry, I just focus for the most part on the indices. Not that one couldn't do a cyclical analysis of the stocks you discussed. For me, it's a matter of time. There's just so many hours in the day.
Yes.
And trying to take a difficult problem and then add another layer of complexity on it just requires a magnanimous amount of time, and I don't have it. So my focus is the indices. That's what I track. That's what I report on in my publications. That's what I trade, and for that reason I stick to it. And there's other things too about sticking with the indices. We've got data going back hundreds of years. We don't have that on individual issues. And then we have market internals. We have new highs, new lows, advances and declines, things like that we don't have with individual issues. So for me as a technician, there is so much more, not only long-term data, but ancillary data, I would call it, available with the indices that individual issues just don't have.
Mm-hmm. If you're going back to the old days, if you remember, boy, we really didn't have anything when we started doing this. I mean, we basically had the Wall Street Journal, and we had Bill O'Neill, over there in on Venice, where he had his daily price graphs. But other than getting your prices through commodity perspective on futures, you didn't have anything. Now everything is at your fingertips on your telephone if you're out on a boat somewhere in the Pacific. So it's just totally amazing what's happened to us in information. We've got to take a break. Will you stay with us, Stan?
Absolutely.
Okay, thank you. We're going to discuss your next chart.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks. We're talking with Stan Harley of the Stan Harley Stock Market Cycles. Stan, we're looking at your S&P Cash Index and your bullish outlook. Do you want to describe what you're looking at here? That was the second part.
I'm looking for the market to generally trend higher, Larry. Mm-hmm. I think we are in a table-pounding bull market. I don't see an important pivotal high until the latter part of next year. Within the context of that operating premise, we've got these intermediate cycles that we need to track that average about 33 weeks. And then I use some daily cycles that help me refine that just a little bit. Mm-hmm. When you and I were on the air the last few times, we talked about a cycle that I've tracked for years. It averages about 93 trading days. And that cycle pinpointed the Brexit low back in June of last year. It also pinpointed the election day low. And if we add 93 trading days to that, well, that lands us in the latter part of March, just a few weeks ago. And really nothing happened then. Well, what cycles do, they are not always a pristine clock. That is to say, we don't always get pinpoint lows every 93 plus or minus trading day, plus or minus a couple, 2 or 3 days. Sometimes cycles expand, sometimes they contract. And given that this cycle has marked major pivotal turns, primarily lows, I'm thinking this cycle is undergoing some type of expansion function. And if we multiply that cycle, that 93-day cycle, Larry, by 1.618, add it to the November low, it takes us into the latter part of June, right around mid-June. And that time period also lines up with the next 33-week cycle bottom. So what I'm doing as a technician is I'm building a case. I want to look for a confluence of cycles, both on the weekly charts as well as on the daily charts. And when I get a confluence within 2, 3, 4 trading days, either side of what I call a centroid, then that, to me, as a technician, as a newsletter author, as a money manager, strengthens the case for a pivotal high or a pivotal low to occur then. And that's, in a nutshell, how I do it. So in summary, I'm looking for this market to trend modestly higher here over the next couple of weeks, topping out in the middle of May. And then I think we're going to have a decline into mid-June, bottoming in the middle of the month of June. And that will be a tremendous buying opportunity.
Okay, I have another question from one of our listeners. It goes back to the work of James Hurst, Profit Magic of Stock Transaction Timing. Do you use the FLD lines, those future lines of demarcation that Hurst talked about for picking price objectives or anything? Or what is it you use for, price levels that you're looking at for support or resistance?
Good question. Yeah, what Hurst did for our listeners who are not familiar with, he published a book back in 1968, The Profit Magic of Stock Transaction Timing, and it was that was the Bible in its day. He showed readers how markets go up and down on a fairly regular basis. He drew by hand envelope bands, which by today's standards is a little bit primitive, but it still works nonetheless. And then he would etch some dotted lines out in the future and draw the trends where they intersected the envelope bands. Do I do that? Maybe I do, but more importantly, I use a combination of things for projecting what I think is going to happen on the y-axis. I use I use Fibonacci relationships, and I use what I call price octaves, all three. And put all three in context, put them together, and that, to me, develops some kind of premise about where I think we're going to see support and resistance.
Well, you hit a word that brings a lot of memories back to me when you said octaves, because, we used to do a lot of work, Jim Twentyman and I, with music. What do you mean by an octave? Are you looking something like a vacillating line that keeps going to the same area? What does that mean?
What I do, Larry, is I take a decimal range and subdivide it by 8, and that gives me static levels on the chart, which are I find are just uncanny in defining support and resistance, and it works exceptionally well. For example, the area right now, right around 2390 on the S&P, is inducing some resistance on the charts. It's held there for the better part of a week. Eventually, we're going to break free of it, but these things are quite a useful tool. I also use Gann angles, which are angular lines projected off past pivotal highs and lows. And then the third technique that I use, which is probably the lesser of the three, is Fibonacci, using Fibonacci projections into the future. A lot of people use that. I find that's probably the least powerful tool. But I use all three to be responsive to your question.
Okay. And as we mentioned before when you were on, that you do not do any astro work at all. Is that correct?
I do a little bit. Yes,
okay.
Yes.
You're coming out of the closet, Stan?
Well, truth be known, you've done the lion's share of work in that area. I've done a little bit. There are a couple of planetary apparitions that I find are quite useful. Sun and Jupiter, for example. But I don't place the heightened awareness on the astro material as I do just basically the basic technical analysis.
Okay, that makes really good sense too. Now, what I'd like to do is, you want to tell the folks a little bit about your letter and how they can reach you?
I have a website, Larry. It's www.harleymarketletter.com, Harley, my last name, harleymarketletter.com. And folks can go on there and find some information about me, and there's contact info, email, and telephone number as well. And
you're pretty easy to reach, I know that. But Stan, what do you charge for the letter? I'd like to. One of our listeners is asking.
They can. I prefer they go to the website and they can get that information.
Okay. That makes very good sense. So we're looking at a day of probably somewhere around the 16th to the 20th of May that you're looking at for an intermediate cycle. Then later on in June, something a little higher.
No, I'm looking for a high in mid-May, as you described, and then I think we're going to have about a month-long pullback into the middle of June, and making the next intermediate bottom in mid-June.
Well, maybe maybe we'll have you back on in the middle of June, and we can either throw vegetables at you or put you on a pedestal and move you around the den a little bit. How does that sound?
I'm happy with both. I've had plenty of the former.
Oh, yeah. We've had plenty of vegetables. There's no question about that. Listen, I want to thank you for being our guest today, and we'll have you on here about the middle of June if that's okay.
Absolutely my pleasure, Larry. I look forward to it.
Okay, good. I hope to get over to see you one of these days this year. Okay, folks. You bet. You bet. Folks, that was Stan Harley of the Stan Harley Stock Market Letters. You go to the harleymarketletter.com and you can get some more information. 877.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, it's not Halloween, but I want to treat you to some sweets here today. If you like sugar, now's the time to buy it, folks. We're down here. We just completed a 3 drive to a bottom pattern. Time and price is squared, so take a look at July sugar. It's really low risk, and certainly it's been in a long-term bull market, but this is a big ABCD, of course, correction that we're watching. Now, let's get over to gold here, because I know we have a great deal of folks here in the den that like everywhere. Everybody loves gold. Well, not everybody. We'll take a look here at the daily gold chart. You'll notice that we made that ABCD pattern there at the 78% level at 1295. Now what we're looking at is a potential to see if the market will react like it did during February and March. It went from 1268, it dropped 70-some dollars right down to the bottom. We would be looking at that same type of move to come in right around 1220. That's where I came up with the 1220 level. That will be a 78% retracement of the low in March. But even more important than that, it will be a 382 retracement of the low from December of this past year. And remember, the low that we're looking at to do the measuring on everything is the December of 2015 when we hit $1,030 an ounce. Well, at least I didn't make any grammatical errors as I spoke today, at least one or two, but this is what we're watching in gold. You'd like to see another couple of weeks down into about the middle of May, which happens to line up with some cycle stuff that Stan Harley just talked to us about, and we'll watch that one very, very closely. So around 1225 is what I believe we're looking at in the gold. However, if we do get above, some reason, get above that 1295 level, like what happened in the stock market, just buy gold because it's gone. It's really going to go if it gets above $1,300 an ounce. So that's what it looks like from the cheap seats here in Tucson, Arizona. And thank you for listening today, folks. I appreciate it. I'll be back on the air on Monday. And remember, we'll have Norm Winsky on Wednesday. He's got some really key things coming in, and we'll see how some of these things line up. So that's it. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.